Hello from Trend Signal for our review of the data and events the week beginning the 20th of February. We start the week with holiday in the US actually. It's President's Day. US markets are shut all day Monday. Expect certainly lower volumes, not necessarily lower volatility if something happens untoward. There won't be so much there to prevent some of the wilder swings that could happen. President's Day, actually, it used to be called George Washington's birthday, so it's in celebration of George Washington's birthday, the first President of the United States. Major headlines over the weekend, well, nothing much new there. Trump, no change really, talking about various things. In Florida, there's a comment here about Donald Trump and the siege of Washington. And a comment here on Market Watch about his reference to Sweden and a very confused message it was, lacking much in foundation, but that's Trump. That's Trump for you, I guess. Kraft pulling out of the bid for Unilever is also a major headline. Odd, having just announced it 48 hours previously, though. I guess, as a lot of people have said, it doesn't paint their advisors in particularly good light. Maybe there are other motives, but on the surface it seems that Kraft did not have the stomach for it after stirring up, I suppose, what was quite a bit of political and employee angst. Some called it a bit of a hornet's nest. Plus Warren Buffett, who's a big stockholder in Kraft, is on record saying he doesn't like these aggressive takeovers, acquisitions, whatever. So maybe another factor there. But it certainly has lit a fire under the food and consumer staples market anyway, so there may be other benefits. And it's likely that Kraft Heinz, as it's called now, will not be able to come back to the Unilever question for 6 months now under the takeover code. But that has yet to be confirmed. Markets last week, equities still powering ahead, and the main powering was in the US. The Dow up 354, which is about 1.75%. The Standard & Poor's 500 up 35. That's 1.5%. Lagging those were the DAX in Germany, the FTSE in the UK, up anywhere between 0.5 and 0.75%. The Nikkei sticking out like a sore thumb, really, down 144 points, or 0.75% on the back of a slightly stronger yen again. Sterling, well, that tumbled last week, down at 1.25 cents against the dollar, tumbling on the back of very poor retail sales, with some suggesting that the weak sterling effect is pushing up prices and putting off consumers from spending. Probably too early to tell, but of some concern, I'd say. Gold up another couple of dollars. Oil, very strange, down 89 cents on the UK Brent or UK oil. US oil down 41 cents. Strange goings on in the oil markets with particularly strong builds in US crude oil stocks, climbing 39.1 million barrels over the last 6 weeks, but on each occasion the actual numbers beaten the consensus forecast by some margin on 3 occasions. But as soon as the data's out, literally half an hour later, the market tends to rally. So there is something afoot. If it was a thinly traded commodity market, you might think someone was trying to corner it or manipulate the market, but this is oil. And so for now, I think the real reason, as some media outlets suggest, is a bit of a mystery. Trump obviously is up to his tricks again. His comments in this rally in Florida was again bringing the message to the people and avoiding the mainstream media. Well, nearly all, apart from Fox News. And it was Fox News that Trump reported on Friday about the rise in crime in Sweden. So it did make him look a little bit foolish, certainly foolish to most, but not his ardent supporters who were at the rally. And of course his own administration, a case of, I suppose, the emperor's new clothes, really. Trump tends to only agree with the advisors that agree with him. So we're in that conundrum, really. That's the downside about Trump and his goings on, but the upside to Trump is that the stock indices continue to power ahead. Another strong week with all 4 major indices hitting all-time highs. In fact, last week they hit them on 4 consecutive days, which apparently is not been achieved since June 1995, but it underscores what a strong performance we are witnessing in equity markets. Let's have a look at what's going to power the market this week. It's not just Trump's tweets about massive tax cuts. Data last week was very positive. If we quickly check on data last week, we can see that the data that beat forecasts are the ones in green. So we can see some strong retail sales out of the US, plus 0.8 expected, plus 0.4. Philly Fed Manufacturing Index, 43.3 versus 18.5. So very, very strong data there. In combination with testimony from Janet Yellen, the chairperson of the Federal Reserve, saying that she's not going to hang around to raise rates. The only conundrum for the Federal Reserve, and I suspect for the rest of the markets, is Donald Trump. There we go, back to Donald Trump again. Okay, let's have a look at data for this week. We start the week, obviously, with the bank holiday in the United States for President's Day, so the markets are shut. Tuesday, we have all the market PMI data for manufacturing and services. If we look on the medium impact data on Forex Factory, it brings it all into focus, as it were. Quite a lot out, certainly Tuesday for the Eurozone, the US and Japan. So a lot of data there that will affect those markets depending on what comes out. But we're expecting sort of unchanged to slightly softer data generally on the manufacturing and services PMI. Wednesday sees the second reading of the fourth quarter GDP here in the UK. Sterling sensitive, obviously. Expected unchanged from the prelim reading. In fact, the ONS, when it publishes the first reading, it's only collated 40% of the data. So it's not surprising that we have 3 readings on this, but certainly the expectations are for an unchanged number there. In the evening of Wednesday at 7 p.m., we have minutes from the Federal Open Market Committee, the meeting held a couple of weeks ago, maybe offer some sort of confirmation maybe of Yellen's thinking or the committee's thinking on the potential pace of rate rises this year in the US. So that's Wednesday evening at 7. It certainly can affect the stock markets and currency markets, obviously, and bond markets. So something that will attract attention. Thursday, we have the crude oil inventories. I've just mentioned about those being particularly reporting particularly strong builds over the last 6 weeks, I should say. That's delayed by 1 day, normally out on a Wednesday. This is out on Thursday at 4 p.m. Due to the holiday on Monday. And finally, then we have the University of Michigan consumer sentiment data on Friday. Consumer confidence and consumer sentiment very important for the health of the U.S. economy and company profits, etc. And any positive numbers will be positively received. Looking for an increase in this number from 95.7 to 96.1. That's it. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.